Hi everyone, welcome to the Buffett and Beyond Research Stock of the Week, and we are going over ASML Holdings, and this stock is outperforming the market, and we've been asked a lot about it recently, so we're going to go over it and show you why, all the questions. And meanwhile, if you want to have lunch on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's look at ASML, and it is traded on the NASDAQ exchange and also the Euronext apps in Amsterdam. So, it's a foreign company, folks, relative to those in the United States anyway. And the company sells an integrated portfolio of lithography systems, mainly for the manufacturing of complex integrated circuits. So, in other words, this is a semiconductor equipment stock, not a semiconductor stock. So there's a difference. So it's kind of nice to be in a situation where you're making things for the semiconductor industry, because in the semiconductor industry, we don't know which company is going to come out with the next semiconductor that's going to wow the world and then be the top dog there. So we kind of like these companies that are in the background a little bit and sell the needed information or the needed systems for the semiconductors. Now, the company supplies systems to integrated circuit semiconductors manufacturers throughout the United States, Asia, and Western Europe from 60 locations. It's a big company, folks, and its largest customers are the TSMC Group, Intel, and Samsung. So, it's got a lot of customers right there. It has 44,000 employees. So, as I mentioned, it is a big company. And let us look at this company relative, and this is kind of a snapshot so we can compare the numbers of ASML or any other company to that of the average stock in the S&P 500 out there. So when we look at the clean surplus return on equity, which is a comparable return on equity, it's certainly not, and I do mean not, the traditional accounting ROE. It's totally different. So the clean surplus return on equity, which measures the core operations of the company, double that of the average company out there. Net income growth, we're looking at 17.3% versus that of the average stock of 13%. And then when it comes to revenue, we kind of really like this number here, where the average stock's revenue for 2024 is approximately 7.1%. ASML is 15.9%, more than double the revenue of the average company out there. And that's what you need to bring to the bottom line. You have to have that revenue, or you're not going to exceed in these other two areas. All right, now let's look at the numbers a little bit more closely rather than the thumbnail shot that we have here. And look at the net income over here. Now, what is net income? Net income is the clean surplus earnings, and that means it has to do with the core operations of the company, and it has no non-recurring items in it. In other words, I like to use McDonald's as an example. If McDonald's sells off some of the property, because McDonald's is a big real estate holding company, but when we compare McDonald's, we want to compare it against Burger King, we want to compare it against Wendy's. So when McDonald's sells a piece of property, we don't count that as profit in the McDonald's net income because it's not a real estate company. We're comparing it as a hamburger company or fast food company to other fast food companies. So net income takes away those non-recurring items so that the net income of one company can be compared to the net income or the pure operating, core operating area of a company. And that gives us the clean surplus return on equity divided by, we have to divide this by the owner's equity, which is totally different than the owner's equity that we see on the income and the balance sheet out there. So you have to be careful. That's why the system works so very well. But here's the point. 23.4% clean surplus for 2025, 26.5%, and then for next year projected to be 28.2%. Why is this so important that it's rising? Because that means the net income over here is increasing at an increasing rate. We love companies that increase at a consistent rate. And boy, when we find a company that's increasing its net income at an increasing rate, or accelerating is the word that we're looking for, that's when you get a rising clean surplus ROE. So you can see down here, it had been very, very good, and then 2022 and then 2023 actually rose up. And we don't know why in 2023, when all other companies were faltering a little bit, that, well, because we had almost a recession here in the United States at that particular time, but then all of a sudden this company started increasing its clean surplus return on equity. And when we look at the 3-year, 5-year, and 10-year ROE, we can see that it has been rising little by little. So we kind of like that, folks. Retention rate for 2026 is going to be 77.9%. That means it's putting most of the money it's making back into itself in order to grow. Net income growth we went over already. Revenue growth we went over. Both of them are exceeding the average stock out there. Over here, years to pay debt, it has almost no debt. That's very, very nice in a company, folks. Almost no debt. And the dividend is very, very low. That means they are taking most of the money they're making right here and putting it back into itself in order to grow. Now, when we look at the year to date, black line is the S&P 500. We can see that the S&P 500 had a tough beginning to this year, went down, so did ASML, and now that the market is coming back, this stock is coming back even stronger. So as I'm recording this right now, we're sitting at a 10%, almost a 10% return year to date for this stock versus barely a positive return for the S&P 500 right in here. Now let's look at 5 years. Right in here is 2022, and that's when our stock market, the S&P 500 here in the U.S., went down about 19.6%. The NASDAQ went down 34% during that time, and all our tech stocks, semiconductor stocks and tech stocks went down just like this. And then when the market started recovering, this stock went way up. Now, in the beginning of this month, or actually the past 2 months, the stock market has been going down. This stock dropped a lot, and then all of us, and because of the tariffs, nobody knew how much they were going to be charged. I'm talking about ASML, how much they were going to be charged selling their equipment to all these other countries. So there's a lot of unknown there, just like the rest of the market. It came down, but look how it's starting to come back up very, very quickly as the market comes back to maybe some kind of normalcy for a while. So yeah, this might be, as was asked of me, this might be a good place to buy this stock in here, because once it starts going up, you can see that when the market goes up, this stock really goes up. When the market goes up over here, this stock really went up. So we're coming into an expansion phase now, and we expect that for the next 3.5 years. And so this may be a good point to take on a position in ASML. So folks, we had a pretty good couple of weeks here, and we're hoping to hold on to it because all sorts of trade deals are being made out there relative to tariffs and who's going to make what, and Apple moving its production from China to India, but it's moving all the production also into the U.S. So we'll see what's going to happen, but it looks like the worst of the rhetoric is over anyway, and we'll see what happens from here on in. Maybe things might be getting really, really better. And some of the rating agencies out there said, who thought we might have a recession this coming year, are saying there's less than a 50% chance for recession going forward. So a good week, a good 2 weeks, and hopefully the next couple of weeks are going to be good going into the summer. So folks, you go out there, count your money, but then forget about the market and just go out there and have a good time, because the market will be here when we open up again. And folks, we'll be right back here. We'll see you in a couple of days. So stay safe, and we'll see you later.